Hey everyone, it's Julie here with Tip Ranks. Today we're taking a look at 3 strong buy dividend stocks. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at 3 dividend stocks that are rated a strong buy among Wall Street analysts. We're going to take a look at these companies, what it is that they do, what kind of dividend they pay, and of course what those Wall Street analysts are predicting for the stock's future. I found today's stocks on the TipRanks stock screener. Found underneath the screener menu, here I put in a few different filters, including a high dividend yield, a payout ratio between 20 to 60%, a strong buy consensus, and an outperform rating on the TipRanks Smart Score, and that gave us a list of companies below. You can try the stock screener for yourself right on the TipRanks website, or it is available on the mobile app as well, which you can download using the links in the description below. If you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel. Now let's dive right into our 3 strong buy dividend stocks. First on the list is Standard Motor Products. They trade under the ticker SMP, currently priced at $37.51. Their stock has gained nearly 22% in the past year, and in the last 3 months has climbed 31%. They currently score a 9 out of 10 on the TipRanks Smart Score. SMP manufactures and distributes replacement parts for motor vehicles in the aftermarket industry. They serve both professional service dealers and do-it-yourself customers, primarily in North America, with a focus on automotive, heavy-duty, and agricultural vehicle applications. They operate through 2 main segments with their vehicle control, producing parts like ignition and emission components, fuel and air management systems, and other engine-related products, and temperature control, supplying air conditioning and heating system components. They first began paying a dividend back in 1989, and they have been quite consistent with it. They did miss a couple of quarters during 2020 due to the COVID pandemic. Their current quarterly dividend is 31 cents per share for a yield of 3.18% and a healthy payout ratio at 31%. And over the last 10 years, they have a compound annual growth rate for their dividend of over 11%. They did come out with both an earnings and revenue beat in their latest quarter on August 5th, plus an increase to their future outlook. Earnings per share of $1.29 beat by 34 cents, and their revenue climbed 27% to $493.9 million. They saw strong performance in their aftermarket segments and updated their guidance to now anticipate low 20% range for their sales growth. Their stock does just have 3 current analyst ratings, but comes in as a unanimous strong buy. The average price target of $45 implies an upside potential of 22%. Looking at those ratings down below, they range from an upside of 15% up to over 30%. For our second stock today, we're taking a look at Evergy. They trade under the ticker EVRG, currently priced at $72 per share. Their stock has climbed 24% in the past year, and in the last 3 months is up 10%. They currently score an 8 out of 10 on the TipRanks Smart Score. They are a regulated electric utility company serving approximately 1.7 million customers across Kansas and Missouri. They operate through several subsidiaries like Evergy Kansas Central, Evergy Metro, and Evergy Missouri West, serving both residential and commercial clients. Their power generation includes a mix of sources like coal, natural gas, nuclear, and renewables like wind and solar, with a growing emphasis on clean energy. Evergy is the result of a merger back in 2018, so they've been paying a dividend consistently since then. Their parent company's dividend history goes back decades beyond that. Their current quarterly dividend is about 66 cents per share for a dividend yield of 3.64% and a payout ratio of 53%. Over the last 5 years, they have a compound annual growth rate of 5.8% for that dividend. They also came out with an earnings and revenue beat for their quarterly earnings on August 6th and reaffirmed some future outlooks. Their earnings per share of 82 cents beat estimates by 4 cents despite some unfavorable weather conditions. During the quarter, they also achieved important regulatory milestones, and their economic development pipeline exceeds 15 gigawatts with significant potential from new large customers. Looking forward, they reaffirmed their long-term growth target of 4 to 6% through 2029. The Evergy stock has 7 current analysts and does come in as a unanimous strong buy. The average price target of $76 implies an upside potential of nearly 5%. Looking at those price targets down below, they range from a fairly flat price target at 0.8% up to 7.75%. If you've made it all the way to our third stock today, then do me a favor and make sure you've hit that thumbs up button. Last but not least, we're taking a look at California Resources Corporation. They trade under the ticker CRC, currently priced at $48 per share. They are in the red this past year, down 7% overall, but in the last 3 months have gained about 13% and currently score a 9 out of 10 on the TipRank Smart Score. California Resources is an independent energy and carbon management company, and as the name implies, it's based in California. They're focused on oil and natural gas exploration, production, and decarbonization efforts in California. They hold the largest privately owned mineral acreage in the state and use advanced technologies to enhance safety and efficiency. And through their Carbon TerraVault initiative, they develop carbon capture and storage projects to reduce emissions, aiming for net zero emissions by 2045. They did just start paying their dividend in 2021, but they have grown it significantly since then. Over the last 3 years, they have a compound annual growth rate of nearly 45% for their dividend, currently sitting nearly 39 cents per share for a yield of 3.25% and a payout ratio just shy of 34%. In fact, in their last quarter, they returned a record $290 million back to shareholders and came out with both an earnings and revenue beat. Earnings per share of $1.10 beat expectations by 20 cents per share, and revenue climbed 90% year over year to $978 million. The company achieved $235 million in synergies 3 months ahead of schedule and improved their full-year outlook, increasing their adjusted EBITDAX by roughly 7%. With 9 current analyst ratings, the CRC stock nearly comes in as unanimous strong buy, with 8 buys and 1 hold. The average price target of $58 implies an upside potential of 21.5%. Looking at those price targets down below, they range from an upside of 6% all the way up to 33%. So that is a quick look at 3 dividend stocks, all with a strong buy consensus from Wall Street. Let me know your thoughts on these companies and what other dividend stocks have been catching your eye lately. I always love hearing from you guys. Please keep in mind these videos are never a suggestion to buy or sell any specific stock, so please make sure you're always sticking to your own investment plan. Thank you guys so much for watching. Have a wonderful day. I'll see you back here next time.